Welcome to the Deep Dive. Today we're taking a closer look at India's recent economic performance.
That's right. We're digging into the latest GDP numbers using that money control analysis you mentioned.
Exactly. And the big news, the headline, is pretty positive, isn't it?
It is. GDP growth hitting a four-quarter high in Q4 FY25. That definitely catches the eye.
It does. But, for this deep dive, we want to get past just that headline number.
Right. We need to understand what the analysis says is actually, building that growth.
Which sectors were really sort of pulling the weight? And why are they shining right now, according to this data?
Yeah, the analysis gives us some specifics on, the composition. It's not just the overall speed, it's the engines.
Okay, so let's unpack it. The analysis confirms Q4 FY25 GDP growth came in at 7.4%.
Which is that four-quarter high we mentioned.
And it points to things like increased investment demand, higher net taxes contributing to that pickup.
That's correct. And, there was some recovery in agriculture, a bit of support from rural demand, too. But the analysis really sort of zeroes in on two sectors that kept up significant momentum.
Okay, which ones are those? What makes them stand out in this particular data set?
It highlights construction and financial services.
Right.
And what's really striking, according to the analysis, is the level they've reached, their contribution to the overall economy.
Okay, tell me more. What did the money control piece say about construction specifically?
It shows construction's share of the economy hitting a 12-year high.
A 12-year high?
Yeah, its share is now 8.4%. And that's backed by pretty strong growth, 9.4% through FY25.
Wow.
And the analysis links this, especially in Q4, to the government's push on capital expenditure, CapEx.
Suggesting that helped drive higher capital formation.
Exactly.
So a 12-year high for construction share. That's significant. It suggests actual physical building is, a bigger slice of the pie than it has been for over a decade.
It really does.
Okay, what about the other one? Financial services. Where does the analysis put that?
Right, so financial services, and this includes professional services as well, its share climbed to 21.7%.
21.7%. And what's the significance of that number, according to the analysis?
Well, that figure is the highest share this sector has held since this particular data series began.
Since the series began, when was that?
Back in FY12. So quite a milestone within this data set.
Okay.
And the analysis also notes this is the third year in a row that financial services contribution has increased.
So, okay, let me get this straight. We have construction hitting a 12-year peak in its share.
Right.
And financial services reaching an all-time high for this data series.
Correct.
So the analysis isn't just saying GDP grew. It's pointing to these two specific pillars hitting, really quite remarkable levels in their contribution.
Precisely. It's showing where the economic energy was really concentrated in this recent period.
What does the analysis suggest this combination signifies? You've got building things, and you've got managing money and services.
Well, what's fascinating is how the analysis presents these two, one very physical infrastructure focused, the other more about capital flow services as these key indicators.
Alongside that pickup in investment and taxes you mentioned earlier.
Exactly. They're presented as central to understanding the recent momentum.
It really puts a different spin on that 7.4% number, doesn't it?
It does.
It suggests it wasn't just, a rising tide lifting everything equally.
No, not uniformly. It was specific strength in construction and financial services reaching these notable highs.
These multi-year or even series highs for their share.
Correct. The analysis uses these points to paint a picture of a particular kind of growth happening right now.
Heavily weighted towards, as you said, building activity and the financial ecosystem that supports it.
That seems to be the core message coming from the breakdown in the analysis.
So if you're looking at this money control analysis, the real takeaway isn't just the 7.4%.
No, it's that a significant chunk of that growth, that pickup, seems to be powered by really robust activity in these two areas.
Construction and financial services.
Their performance, hitting these historically high contribution levels within the time frame measured, that's a key message from the data presented.
And recognizing that they're reaching these statistic peaks, 12-year high share, series high share, it really highlights where investment and economic activity were, particularly intense.
Yes, in the recent period covered by the analysis, understanding these specific drivers helps you get beyond just the top number.
Right. You start to appreciate the specific components that are fueling this pickup.
Exactly. Gives you a much richer picture.
Okay, let's maybe start to wrap this deep dive up then.
Sure.
We've looked at this money control analysis, seen India's GDP growth picked up to that 7.4% in Q4 FY25. a four-quarter high.
Check.
And the analysis really points strongly towards construction and financial services as major contributors, key drivers,
That's right. You've got construction share hitting that 12-year high, 8.4%.
indicating strong building activity.
And financial services climbing to 21.7%, its highest share since this data series started back in FY12.
After 3 straight years of growth in its contribution, too.
Correct. Those specifics are important.
Absolutely. These details about which parts are not just growing, but reaching these, notable highs in their share of the economy, that's crucial to grasping the story the analysis tells.
It shows the nature of the growth, not just the quantity.
It's a picture of growth with these specific, quite strong pillars holding it up, rather than just everything moving up a little bit.
Well put. It's not necessarily uniform.
So here's maybe a final thought for you, our listener, to consider.
Okay.
The analysis clearly shows construction and financial services hitting these significant highs in their contribution lately. Now, if these two specific sectors continue to be the main engines driving things forward in the coming months, what might that imply?
Interesting question.
Think about what sustained strength in, building things and managing capital might mean for the wider economic landscape. What opportunities could arise? What challenges?
It's definitely something to watch.
So keep an eye on those areas. The analysis certainly makes a compelling case for their importance right now.